Hello, this is Solomon Davis, Right Side Trader. Today is September 20th, 2024, and this is a quick, it was going to be a trade review, but what I'm going to do, I'm going to go over, I've been talking about indicators, and I'm going to throw out an indicator for you guys, one that I think everybody is using, one that we don't use at Right Side Trading. It's one of the ones that I first started using when I started day trading, long-term trading. I just used the one indicator, and it was just a couple simple moving averages and all. Again, like I say, this is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right, I'm going to just jump over to the chart, and this is going to be based off of a day trade, because again, that's when I first started trading. You know, I noticed that I was swing trading and stuff and all, and I had got myself into trouble. And when I got myself into trouble, the day after, the day when the trouble happened, I was looking at the market, and I started looking at the small details, lower time frame, detail of what was happening, and I realized if I had money, how I could have made money, you know, based on what was happening in the market at that time. And all, but I had lost money and all, and I needed to transfer more money into the account and all in order to be able to trade. So after that, I kind of realized a lot of things about, you know, position size, and I started looking at the market more and I started realizing if I just scalped the market, you know, the movements that the market was making, I could clearly see what it was doing and all. And I didn't have any real indicators at that time. I started off using pivots, because pivots was just one of the things that kind of made sense to me at the time, just different levels in the market. And as you can see on this chart right now, I do not have my pivots. Let me just jump over to the charts and all. But I had started using these moving averages. I had saw people using these moving averages, and I had started using these moving averages and stuff. So they were my thing. So I get back to trying to show people, you know, the moving averages, you can decide which ones you like and what works for you. And that's another question I'm going to throw out there. What is your favorite indicator? If you only had one indicator to use, what would you use? And all, that's a question. And all. But what I'm going to show here is just simple moving averages. And let me right click on here, show you exactly what I'm using here. I do have a 10 and 50 on that chart. Let me change these over to the 7 and 21. I'm going to change this. I want my fast line to be 7. And it is simple. And I'm going to change this to 21. And I might not place this out here. And as you're going to see, it doesn't make that big of a difference. But what it's going to do for you by changing it like this, it makes it where you're getting to your trades sooner. It might keep you in your trades a little bit longer. It will get you out of your trades a little bit faster. And I probably have that same thing over here. I want to change both time frames. No, on this one I do have it. I don't know why I didn't have it on that one. No, but let me and that's another thing that you can probably do. You can adjust maybe use two different types of moving averages on your different time frames and stuff, because that's one of the things that I do with my pivots. It makes sense to me. You know, on my pivots, I have on different time frames, I have different set of pivots. So that's why pivots to me is kind of like it's my go-to indicator. It makes a lot of sense to me based on how it's set up. It gives me the levels that I need, and then along with my candle patterns, you know, that works out great for me. And all. But now with the moving average thing, what I've been showing and all, working for a couple people, is these moving averages. It shows you when it comes to trading. There's four things that you really need. You need the market to give you an entry, give you two exits. That's one exit for profit and one exit for stop if necessary, and then also help you see the trend of the market. What is the market actually doing? And with a moving average, I believe that it gives you those things if you can come up with a set of rules and the way you see the market that works for you. and works for you consistently. That's the other thing. Not just happens every blue moon, but happens quite often. Often enough where you can actually be profitable become profitable at trading. And what I'm going to be looking at is a future contract. This is the current future contract. This is, right now I am in the live market, but I'm looking a day back, and I will do another video where I showed I'm gonna be trading in a live simulated market where I will be able to actually speed it up and show you what happened and how you would actually go about taking these trades. But here, doing it a day back and doing it this way, we can just take our time and take a look at what's actually happening in the market. Let me get this off the screen right here. I was wondering if the market was ever going to come back up to that point right there after making not making an all-time high, making a high. But okay, now back to here. What the indicators that we're going to be using here. I'll put this on the screen too. Let me go to drawing. This is probably faster to do it this way. Drawing tools here, and we click here. Control C, Control V. Boom. The indicator that we're going to be using here, let me activate this, and I'm going to move this up just a little bit where you can see this and over. That high got in the way, didn't it? That bubble. I'm going to activate it and I'll move it down just a little bit then, just right there. How about that? Okay, the indicators that we're going to be using is the 2 moving averages, the 7 and the 21, plus the candles. The candles themselves, I looked at them as indicators also, so they can help out. So, like I said, there's 4 things you should be looking for from your indicators that you're actually using. That's an entry, stop and a target, and trend. And just basically just looking here at this right here, I can see the trend, based on this indicator. I can also see, it helps me see that the market is actually moving down, and I'll show it over here. It actually shows me that the market is moving up. But in order to take a trade now, when do you take that trade? When do you actually decide to take a trade to the downside or to the upside? Since with this particular picture that we're looking right here, we got mostly the market was trending down, and I'm gonna kind of explain the down trade, and that's it. So the rules in the trade that I'm gonna go over here is a bearish trade, and the rules that I'm gonna be calling out for this particular is gonna be for a bearish trade. So let me go over here again. I'm gonna put it all. So first thing for a trade, you have to get into the trade. I'm gonna go back, Control V. The rules. Activate. Right here. But one other thing I need to do is explain to you maybe how I'm looking at this indicator and what we're doing with this particular indicator. First of all, if you're watching my candle pattern thing, you're going to know there's certain candle patterns that I look for. The bearish candle pattern, in this particular case, I really didn't see it at all, but I'm going to show it to you. You may not see it, but I see it. It happened, but it happens. This is a future contract. It happened earlier in the morning, and that's one of the things that I look for. Did it give me an early sign? Like I tell the candle patterns, I usually tell people they're an early indicator. Are they going to give you confirmation? Or are they going to play out? You don't know. There's a good site out there called the Pattern Site. I think it's called the Pattern Site. He goes over, doing some statistics on the different candle patterns, which is actually pretty good. He's been around for a long time too. I think ever since I started trading. So when it comes to the moving average, I have a red line and a green line. I'm gonna go into this a little bit right here. My fast line is the 7, which is green. My slow line, moving average line, is the red, which is the slow. For a bearish trade, what I'm going to be looking for is this slow line being on the top. I call this being on the top, being higher, and my green line being underneath. My green line is my fast line. My fast line is going to be closer to price, where my red line, my slow line, is going to be further away from price. In order for me to be able to take a bear trade, I want my slow line on top of my fast line. That tells me that the market is trending down, or beginning to think about trending down, because back here, like I said, it had made the cross, but it hadn't quite started trending down yet. If you was watching this live, you would have been able to see this. That's why, again, I will make another video looking at this in a live simulated market and all, and let you be able to see what is really happening in live, in real time, with these moving averages. Because after the fact, with these moving averages, it can be kind of funny at times looking at stuff. And that's the whole thing. When you are trying to test stuff, you really need to test the data. Do a data test. It's kind of like best, or if you can do some kind of test, first do a data test and all. I'm not going into that. And the other thing that you need to do some simulated trades, and you get with a broker that allows you to do simulated trades with your indicators and everything, where you can see how things happen as it is actually happening in a live market. Even though it's simulated market, things will be still, you'll be seeing how things actually happen. So that's why I say I'll do another video that way, doing that. So right now, back here, and let's just say one of the other things is we're not going to trade the market until the market actually opens. And I'm doing that because maybe you're not able to trade future contracts. You're only able to trade options. And when it comes to options, that's a whole nother ball game. That's, again, no trade recommendation. I do not recommend you trading options until you really understand what's going on. You've had some training where you understand all the moving parts of options. Because options, you can trade options and buy or sell them at the wrong time, and you think things are going to work out right, and you can still end up losing money, especially buying options. The only good thing when it comes to about selling options, they can expire worthless. And since you sold them expiring worthless, mean you was able to keep all the money that you actually sold that thing for. And that's why a lot of traders end up selling options instead of buying options, because now all they already collected their money, and now they need to just figure out a way of keeping that money. That's why that seems such a great strategy for a lot of people. But not getting into options. Let's get back to our indicators and stuff. I always get off track. Now back to our indicators, that moving average. So in this particular case, we had a bearish pattern back here. That's why I'm saying it did give a sign. You may not; these lines may have not. That's why I said I want to go in the live market and do this. But you would have saw this bearish pattern back here before this even happened here. You had a bearish pattern, a bullish-looking pattern. You had a bearish-looking piercing pattern. Then you actually got confirmation, that this thing did want to go down. And at that time, most likely you already had your red on top and your green on bottom. So again, you can see that the trend was actually getting ready to change pre-market. But if you wasn't able to trade a future contract, and be able to get into a trade to the downside, you have to wait until the market open. But if you was able to get into a future, doing a future contract, now anytime that once it gets below here, below your fast line, and you got to close below your fast line, and you got a confirmation on that, you can get into that trade at any time based on your trading, how your trading style is, and based on where you want to place your stop, and based on what your target is. So that's your entry. Your entry, again, you had a bearish pattern. You can see that the trend, you got the slow on top of the fast, and all. And now your entry, it can be based on this candle. You can enter any time on this candle, or pull back on this candle, or at the close of this candle. If you're a more aggressive trader, you may have wanted to take a trade, place your entry after you got to close below your fast line. You wouldn't take that entry back here because you didn't get a close below your fast line. You didn't take that entry there because it looked like maybe it was going to reverse on you. you was only able to take an entry once it got a close at this point here, if you're trading the future market. Now, if you're trading options and you see that the market, okay, the market is going down, the market is going down. You see all this stuff happen. Look like you got a bullish looking pattern here, and you actually got confirmation of that pattern, but you saw that it couldn't go down. You already saw that it has been trending down. So as soon as the market opened and you see the market zooming back down below your fast line, all based on how aggressive you are, you take your entry right in the future market. You take your entry right away to the downside, to play that thing down. How many points are you going to get based on, again, your trading strategy, your trading style, what you want to do on this particular trade, what the market actually do. You take that, you go for those points, be it 5 points, 10 points, 20 points, 100 points, whatever it may be. But make it realistic based on what the market actually does, in the time frame that you're actually trading. This other little indicator down here, if you're you got questions about this is my little custom thing that I haven't started sharing yet with other people, because I'm still kind of looking at it myself. But it also lets me know that I have selling volume, so that's my other indication that it's okay to go ahead and sell something at this time, So again, I'm in this trade both times. Now, the question is, now you're in a trade, when do I get out? How much do I take? So what do you do then? Let me let's do this. Control C, Control V, boom. Okay, activate, and I'm gonna just move that down here like this. Okay, so your stop, your target, your stop based on if you got in, say let's go back to your first entry. If you was trading, was able to trade a future contract, and you was watching this thing this early in the morning, your stop. Usually, I like making my stop right now. Stop. I say a close above the fast line or a close above the slow line. So if you had got in that trade based on this right here, based on your entry was a close below the fast line, now your stop is a close above this fast line, above this thing. It's a drop dead, I'm out of this trade type thing. So you really could have, if you would have traded this thing in a future contract early, you would have been able to ride this thing all the way down to here. You might have taken this, because that's a close above the fast line, So, so let's just say from here, that's 90 to here. You didn't make that. You made a couple of points, maybe, if you took that stop. But if you was able to ride it down a little bit more, again, it's all according where you got in at, if you wrote it all the way down here, you still only got a couple of points, if you took that close here. It didn't close above here, but you had a close here. So you still would have got a few points here if you took it all the way to there. So it gets back to how are you gonna set your stop? Are you gonna set your stop based on a previous high and then be able to write it down? Or are you gonna set your stop based on your indicator and all? And like I said, if you're gonna base it on the indicator, are you gonna base it on a close above this fast line, or are you gonna base it on a close above this slow line and all? And so that comes back to your preferences, your tolerance, of the market moving and seeing what's actually happening. But the whole and again, and in a live market, it's completely, different, trying to manage that trade as these things are happening after the fact. It's a whole lot easier just seeing what actually happened here and all. So that's that. So again, your profit can be target X number of points. If that's 2, 10, 20, 100 points that you may be targeting. Your other target, you can base it based on a pull pattern or trend change. So your bull pattern in this particular case, once you start seeing this, you might start thinking it's time for me to get out of that trade. You got in way up here. Even if you did the trade based off the opening, you would see, seem like the bulls are beginning to come in. Even though it came down here again, but this would have been your initial thing to get you out of that trade. Then like I say, if you get a close above fast or a close above slow, here you didn't quite get that close above the fast, and it came back down here. But here you did finally get a close above fast. That's your first sign that's saying this trade may be done or you should be out of this trade. And then if you was being hard-headed and being stubborn, like a lot of us are, it wouldn't be until here it was real close and you kind of, and then you see you get out there. And again, it's all based on if you was playing based on this opening and all, or you was playing on that. If you was playing on this, now you let this trade where you should have gotten out of here, and it's gone against you here, and you're back maybe in a losing trade and all. So again, it gets back. I'm giving you multiple things to look at and all to help you decide where should you get out of your trade, for profit or for loss. And again, it gets back to say that. So I hope that's being pretty clear about where to take profit, where to stop based on this stuff, and that trade is done. If you took it from up here, if you took it from here, say you didn't get into this trade to the downside, because again, it had already made a cross. You got red on top of green, got price under green, and all. You take this trade. You can take this trade on this pullback. Ideally, you'll take this trade on this candle here somewhere, and say you got in at 66, 67, and all, playing it to the downside, 67 down to say right here. That's 58. That's almost 10 points on that trade. So over 5 points on that trade. So again, what is the amount of points that you're looking to get on that trade? That's what you got to start thinking about. Now, once this thing start pulling back, you got to realize, okay, do I want to be in a break-even trade? Because at this point here, you have gotten a close above the fast line. Or are you going to let this thing go all the way against you and end up making a winning trade turn into a losing trade, getting a close above this point here? So that's the things that you have to kind of like look at. That's the things that you really need to study, to help you decide, how do I manage my trade? How many points do I look to get on my trade? And what should my rules be for entering my trade and exiting my trade for profit or for stop? I think that's it. I think that's all I really want to cover on this. I will do another video on showing you this in the live market, live simulated market, to kind of like help you see it as it actually is happening. One thing I didn't mention is the 2 time frames. On the 2 time frames, what this is indicating. I like using the faster time frame to actually get my entry. Once I'm in that trade here on the slower time frame, I can use it to help me manage that trade. This will help me get a better entry. Let me do one other thing here. I'm gonna change this up a little bit. I'm gonna change this to a price level. Say we got in, I say on the short side here, and all. I can see that over here right now. So now on the slower time frame, me using the slower time frame to help me stay in this trade, it's one of those things where I can see that this market was actually trying to turn around on me. It looked like it did try to go back down, but it didn't make a lower low on this second 15-minute candle. So again, this market is still trying to turn around on me. It's still looking pretty bullish because I got a higher low and a higher high. So again, I can't let this trade that I entered somewhere around here end up going against me. So you end up taking a break even, or you take a few lesser points than what you was expecting to get on this trade, and be done with it. Because now here you end up just about getting a close above your fast line. It went above your fast line, but still ended up closing below your fast line, and it came back down here. If you want to try to slow down, cut out some of the noise from over there, and you end up getting back down here to these bottoms again, but now you're getting another bullish looking pattern. It's time when it comes to taking profit, I'm the type that I take my profit right away and I know I can trade again. So once you start seeing this, just like you guys, like you want to get into a trade early, you want to get into your trades early so you don't want to miss out. You need to learn to get out of your trades so you don't get back all your profits. So again, once you see something like this, you think it's pushing down, and all when we're playing this to the downside now. As soon as you start seeing this thing going back up and going back this way, you need to be out of this trade. That's just the way it is. And even it's because again, it's getting ready to form a bullish looking pattern. It's beginning to give us a bull pattern. It looks like it's beginning to give us a trend change. I definitely would like to show this in the live market, how it starts looking then, and it'll show you. I laugh because it shows you why when I'm trading, I'm in and out of my trade, and I'm basically just looking at the candles and I'm looking at my indicators, and because my indicators, my candle pattern is going to give me that leading indicator, and all that something is changing in the market because that's price, and then these other lagging indicators that I'm using are just kind of like my drop dead thing, and that's why I like having a couple on here, this fast moving average and this slow moving average, to tell me, okay, your trade is done. And that's it. That's all I really want to share here at this time. This is Solomon, Right Side Trader. Hope this is being helpful, trying to give out a little bit more information without giving out too much information. And if you're interested in this style of trading and being able to look at the market this way, just contact me, contact us at Right Side Trading, and I'll see how we can actually help you. That's it. No trade recommendations here. Study, 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 study. See if this actually works for you. See if you actually really even see anything here. Because I know when I first started trading, a lot of times I didn't see anything based on what people were talking about. Because again, it's like trying to learn a new language. It sounds just like a lot of blah, 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 blah. And you're wondering what's going on. But that's it. This is Solomon. Hope you guys had a great week. Hope you guys have a great weekend. And I'll talk to you later. Have a good one. Bye.